Hello everyone and welcome to another accounting video. Today we will continue to analyze more business transactions and we will do so by looking at some of these adjustments here. And before we begin, it's always important to know that we are looking at the business's point of view. Alright, let's get started. Okay, in the first transaction on this page, we can see that the business borrowed money from the bank. Okay, so when the business borrows money from the bank, the business will owe the bank and therefore the owing to the bank or the bank loan increases. Okay, not really mentioned here is what happens to the money. Okay, this money will normally be deposited in the business bank account and the business will have more money in the business bank account. Alright, next transaction. The business issued a check. So when they issue a check means they are paying a check, which means that money is being withdrawn from the business bank account and the cash at bank account will decrease. Okay, this money is being used to repay the bank loan, which means that the business will owe the bank lesser. Therefore, the bank loan will decrease. Okay, next example. Business obtained a loan from the bank. So this is another way of saying the business borrowed money from the bank. So since they obtain a loan, it means that the business has taken a bank loan and the owing to the bank will increase. Bank loan increases. And similar to the first example, this money will be deposited in the business bank account and therefore the business has more money in the bank and the bank or cash at bank account increases. Okay, next adjustment or next transaction, business made a partial repayment of the bank loan, which means that the business is paying the bank whatever that they have owed, not fully but partially. That means a little bit of it, which means that the business will now owe the bank lesser. Okay, and normally this payment is made from the business bank account, which also means that the cash at bank account will decrease. So cash at bank also goes down. Next adjustment here, okay, business receive interest income from the bank. Okay, so interest income is a form of earning and the earning increases. Business makes more money in that sense, or what we call more earning. Okay, this money will be deposited in the business bank account. Therefore, there will be an increase in the cash at bank account. Okay, next example, business receive consultancy income. Okay, this is another form of earnings where the business has done some form of work or service for another person and the business would have more earnings in this case. Okay, take note that when it comes to income, these are earnings made by the business. So again, this earning comes in the form of a check which will increase the business's bank account. Therefore, cash at bank increases. Okay, next example is a little bit more tricky. Okay, however, let's look at it closely. The business has provided consultancy services, which means the business has earned more in the form of consultancy because they have provided some work or service to this other party. Okay, however, the business has not yet received the money. Okay, since they have not yet received the money, we should not affect the cash at bank account. Okay, however, this money will reach or will be received by the business in future. So anything that is received in future is a receivable and we would term it as a consultancy receivable account. It's an asset because the business will receive some form of benefit in the future. Okay, next example here. We have an example here where the business has yet to receive interest income earned. So again, this is a form of earning, right? Interest income. So we would increase the interest income account as a form of earnings. Okay, and since the business has yet to receive, that means the business has not received the money yet. So we should not adjust or affect the cash at bank account. Okay, however, since this money will come in the future, we would increase the receivable account and attribute this receivable to interest. So we will record it in the interest receivable account instead. Alright, moving on to the next example here. The business paid rent expense by check. Since they paid by check, we would know that the money in the business bank account will decrease and therefore cash at bank decreases. Okay, moving on to the next effect, which is going to be a bit tricky, so listen up very carefully. Okay, the business is paying for rent. Basically, what this means is the business has consumed some form of a service by meaning the business has used up some space belonging to another person, and now the business has to pay for this space that they have used. And since this space is termed as rent, right, that the business has consumed, it is a cost to the business. Okay, it's a service enjoyed by the business. Therefore, we would adjust it in the rent expense account as an increase because the business has used up more service, or the business has now gotten an increase in the cost of their operations. Therefore, rent expense increases. Alright, and in the next example, the business had interest expense. Okay, similar concept to the previous example. The business has consumed some form of a service, and this is a cost to the business. Basically, this service that is enjoyed by the business is from the borrowing of the money, which the business can use for many purposes. However, when the business borrows money, they have to incur additional cost, and this additional cost is known as interest. And since this is a cost that the business has to bear, right, it is a service or cost enjoyed by the business, rent, or rather interest expense in this example, will increase. Okay, however, the business is not paying any amount of money yet to the bank. Okay, and this is an owing. Okay, by now you would be familiar that when there is an owing, we would record it in a payable account. Okay, this payable account is related to interest, therefore interest payable also increases. Okay, we do not use the trade payable account because this cost or this service is not related to goods, right? Therefore, we would record it in the interest payable account instead. Okay, next example, business owes rent expense. Okay, so by now we would know that when the business owe, okay, it has to do with the payable account, right? The obligation to the supplier increases. This is related to rent, therefore rent payable increases. Okay, next item is related to the cost of this service that is enjoyed by the business, right? So this service here is rent. Since the business has consumed more rent, or the business has used up this rent service provided by another party, right? We would record it as the rent expense account increasing, or the rent expense account increases because the cost to the business has gone up. Okay, last adjustment in this list. Okay, again, we are looking at interest expense. Okay, since the business has incurred some form of interest expense, okay, the interest expense account will increase because the cost to the business goes up. Okay, however, the business has already paid this interest expense by check, which means that the business's bank account would reduce in balance. So cash at bank account decreases. Again, these adjustments here may be a little bit more complicated, so you may want to review this video again and be familiar with the different transactions. Alright, I'll see you in the next video.